So what a crazy day we had today in the markets, ladies and gentlemen. What a pretty brutal day from the open down towards the close, and then we had that rally towards the end. But this was, I don't know, man. I don't know. This was looking pretty grayish and shadyish and whatever you call it. Any type of negative reaction of the price action that we're seeing currently out of the indices. And there's a lot of things anybody can speculate as to what it's causing this, and whatever. We're not here to try to be right about it. We're just trying to make money from how we can take advantage for any move in the markets. All right, so let's dive into the analysis. But actually, before I do, let me introduce myself. Camilo here from Trending Waves. And as always, I hope you're well. So if you're enjoying this content, please subscribe to the channel, give me a thumbs up on this video, and most importantly, do not forget to hit that bell icon so you'll be notified when I upload these videos that I upload every single day. As an alternative, guys, if you want Elliott wave analysis for any chart of your liking, any chart that you're investing in, long-term, short-term, whatever it is, or everyday updates on the indices, consider joining Trending Waves. Okay, the link to the Discord group will be pinned down in the comment section. Now, the SPY, let me just bring up to you guys our intraday charts. All right, we see that at the open, right after we got the initial jobless claim, which was bad, but with jobless claims being bad, that's pretty good news for the markets, right? Why? Because tapering, right, that'll put or throw a little wrench in the wheel for Powell not to really look at what's really going on. Okay, if the job report or the job market, the labor market is not improving, and obviously you saw this morning it sucked. So at the open, we rallied a little bit to only find resistance and start the sell-off. So this was a pretty controlled sell-off, if you ask me. All right, we reached the low towards the 448.92. Now, yesterday we were noticing that when when we met and we started talking about what we were looking for, our main resistance was going to be the 618. Okay, we ever so slightly went above it, but I alerted the group and I said to them, listen guys, if we close below the 618 or this candle does not close above it, it is likely that we will start seeing further down pressure. Now, we broke the lows of December the 1st. That is not a good sign, but you start to see this wicks. Okay, there's a lot of buying pressure going on here. So now the way we may be looking at this, guys, is that perhaps, maybe, just maybe, the wave C has completed. We'll just have to wait and see what happens next week. But for now, we're going to work under the interpretation that there is further sell-off coming into the next week, and the majority of the week we're going to see further further price action to the downside. All right, so from the high of November the 22nd, we sold off in wave A. ABC pulled back into the wave B. Now we started forming this trend line, right? This resistance trend line that originated over here on November the 22nd, was confirmed on November the 24th, rejected on December the 1st, and now we haven't been able to retest it. All right, so out of the wave B, we sold off in the first wave. Okay, ABC pulled back into the wave B at the 618, which is appropriate for a wave 2 pullback, rather. Apologies, not a wave B, but a wave 2 pullback. And then this is in the makings of an impulsive structure. Since we broke the low of the previous wave 1, or December the 2nd low, per Elliott wave guidelines, we have been confirming that this is already the wave 3 going down on this interpretation. All right, so this will be the first wave, second wave up, then first, second, third, fourth, and fifth to complete the third wave. All right, which normally comes in at the 100% extension of the wave 1 versus wave 2. Now, this can go down towards the 1618, but we'll first determine that once we start reaching towards these zones. So now, our initial target for the SPY is going to be 444.27. Okay, our resistance will remain the wave 2 at 459.17, and this trend line resistance that originated again from November the 22nd high. All right, so over to the Qs. The Qs are also in the same boat, except that we reached very shy of the 618. Now, we sold off in wave A, wave B, 1, 2. We're in the makings already of the wave 3, perhaps, but if we break above this wave 1 low here, then this count is invalidated, which means that the wave 3 may still be ongoing. So we'll wait to see what happens on Monday. This is still looking a little sloppy. All right, we're gonna wait and see, but so far this is the makings of an impulsive structure to complete the wave C of wave 2. So 618, 394 still our level of resistance. Over to the SMH. Already this SMH had displayed the resistance at the 618, okay, 309.07. We're still in the makings of the wave C. So the 294 is our next level, our next target for the wave C or wave 4. IWM, I mean, over to the 1 hour time frame, IWM is looking very, very weak, guys. I'm not too sure about this just yet. It's still looking shady. Again, yesterday I told you guys we're gonna wait and see what's gonna happen here at the low of wave 2. If we break this low, then this expanding volatility triangle is invalid, and perhaps we are still in this massive corrective move. Maybe this is a, I don't know, some type of wave 4 ongoing corrective structure, which is pretty ugly, guys. Maybe this is a W, X, and Y. Who knows? We'll have to wait and see. All right, guys. So that is it for me tonight. I hope you're well. Hope you all have a fantastic weekend. Please enjoy, get some rest, and we shall see you bright and early on Monday. Take good care. Peace out. Join Trending Waves. Peace.